Chapter number 1, Nature, Objective and Scope of Audit. An audit is independent an audit wait a second. An audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form. When such an examination is conducted with a view to expressing an opinion thereon. Objectives of audit is to obtain a reasonable assurance that financial statements as a whole are free from material misstatements due to fraud or error, and to reporting of opinion in accordance with audit findings. Another objective of audit is to gain a reasonable assurance leads to formation of opinion whether financial statements are prepared in all material respects as per applicable financial reporting framework FRF. Communication of reporting is also objective of we have to communicate our reporting. It is also objective of audit and to report on the financial statements, reporting and communication in accordance with standards on auditing. So objective of audit is to obtain a reasonable assurance that financial statements as a whole are free from material misstatements due to fraud or error. To gain a reasonable assurance leads to formation of opinion whether financial statements are prepared in all material respects as per applicable financial reporting framework, and to report on the financial statements. Reporting of opinion in accordance with audit findings, communication of reporting and communication in accordance with standards and auditing. Benefits of audit. Audit accounts Audited accounts provide high quality information. It acts as a moral check on employees from committing fraud for the fear of being discovered by audit. Audited financial statements are helpful to government authorities for determining tax liabilities. Audited financial statements can be relied upon by lenders, bankers for making their credit decisions. An audit may also detect fraud or error or both. It reviews existence and operations of various controls operating in any entity and point out deficiencies if any. Nature, objective and scope of audit. Scope of audit. What it includes? Coverage of all aspects of entity relevant to financial statement being audited. Reliability and sufficiency of financial information. Proper disclosure of financial information. Expression of opinion on financial statements. What it does not include? Responsibility of preparation and presentation of financial statements. Duties outside scope of competence of auditor. Expertise in authentication of documents. Investigation. Inherent limitations of audit. Nature of financial reporting. Preparation of financial statements involves judgment by management. Nature of audit procedures. Auditor obtains audit evidence that management or others may not provide. The complete information relevant for preparation and presentation of financial statements. Auditor provides conclusion on the basis of evidence we gather by information. But if management will not provide information, how will we express our opinion? Management may be engaged in concealing fraud by designing sophisticated and carefully organized schemes which may lead to detect which may be hard to detect by the auditor. Not in nature of investigation. Audit is not official investigation into alleged wrongdoing. Timeliness of financial reporting and decrease in relevance of information over time. Relevance of information and its value diminish over time, right? So there is a balance to be struck between reliability and cost. Future events or conditions affect entity adversely. Adverse events may seriously affect ability to continue business. Interdisciplinary nature of auditing relationship with diverse subjects. Auditing and accounting. Auditing reviews the financial statement, which are result of accounting process. Auditing and law. Auditors should have good knowledge of business laws which are affecting the entity. Auditing and economics. Auditor is expected to be familiar with overall economic environment of the client. Auditing and behavioral science. Knowledge of human behavior is essential to effectively discharge his duty. Auditing and stats and maths. Auditor is expected to have knowledge of statistical sampling for meaningful conclusion and mathematics for verification of inventories. Auditing and data processing. EDP यानी कि इलेक्ट्रॉनिक डेटा प्रोसेसिंग ऑडिटिंग is EDP auditing is developing as a discipline itself. Auditing and financial management. Auditor is expected to have knowledge about various financial techniques such as working capital management, funds flow, ratio analysis, capital budget. Auditing and production. Auditor is the one, good auditor is the one who understands the client and his business functions such as production, cost system, marketing. Audit, now tell me, audit is mandatory or voluntary? It is both. But the mandatory audit are like there are two types of audit, mandatory and voluntary. Mandatory audit is required by law for companies and some non-corporate entities. Non-corporate required by law, tax laws, right? Voluntary audit, entities choose audit for benefit even if they are not legally required. Who appoints an auditor? Who appoints an auditor, guys? Owners or authorities based on laws and regulation. Companies appointed by members in AGM. Government companies appointed by CNAG. Reports are submitted to the appointing authority. Companies, shareholders, informs partner who are engaged the auditor, who engaged the auditor. Elements of an assurance engagement. Three-party relationship. Practitioner, responsible party, intended user. Appropriate subject matter. Information to be examined by the practitioner. What is appropriate subject matter? Subject matter is the information which is to be examined by the practitioner. Suitable criteria. Suitable criteria is the benchmarks which are used to evaluate the subject matter, like guidance, standards, laws, rules, regulations. So these are the benchmarks on the basis of which we evaluate the subject matter. So suitable criteria is laws and regulations. Sufficient appropriate audit evidence. Sufficiency refers to the quantity of evidence obtained by the auditor. Appropriateness relates to quality of information obtained by the auditor. Written assurance report in appropriate form. It contains conclusion that conveys the assurance about the subject matter. Types of assurance engagement. Reasonable assurance engagement, limited assurance engagement. What is reasonable assurance engagement? It provides high level of assurance, performs elaborate and extensive procedures to obtain SAAE, draws reasonable conclusion. Example is audit engagement. Limited assurance provides lower level of assurance, performs fewer procedures as compared to reasonable assurance engagement, involves obtaining uh, to draw limited conclusions. They obtain psi to draw limited conclusion. Example, review engagement. Some qualities of the auditor are tact, caution, firmness, good temper, integrity, discretion. Engagement and quality control standards are needed. Why engagement and quality control standards are needed? To ensure carrying out audit against established benchmark at par with global practices. To improve engagement and quality control standards are needed to improve quality, thereby helping users to make diligent decisions. To promote uniformity, to equip professional accountants with knowledge and skill, to ensure audit quality. Engagement and quality control standards. Standards on auditing applicable to audit of historical financial statements. As standards on review engagement is on review of historical financial information. Standards on assurance engagement is applicable on assurance engagement other than audit review of historical. Standards on related service applicable on agreed upon procedures to information compliance engagement other than related service engagement, information compliance engagement. So the chapter number 1 is completed, guys. Bye bye. Thank you.